Now, as technology advances on the continent, it's clear that there's an intersection between money and technology. This includes mobile money, remittances, and earned wage access. The innovations bank on the unbanked to improve financial inclusion and economic empowerment on the continent. Today, we focus on the earned wage access aspect with Sisonke Mgwebi, consultant at Frost & Sullivan. Sisonke, always a pleasure and a good afternoon to you.
Hello, thank you very much for having me.
Let's talk about the relationship between Africans, their money and technology. That one has seen the kind of scale that many other regions around the world just haven't been able to enjoy.
So something that we've noticed here in Africa, especially sub-Saharan Africa, is 66% actually of the population is unbanked. So mobile phones, there's a high mobile phone penetration rate. So that's why mobile money works. That's why earned wage access can help people access accrued but unpaid wages.
So, of course, we speak about mobile money and we also speak of remittances. But there's also, I think, one that is more emergent than the other, earned wage access. Help us understand exactly how this works, Sisonke.
So what happens is, as you are working throughout the month, you are able to, there are platforms, so programs or apps that let you access the wages that you have earned per day or per week, depending on how it's set up. So that's how people are able to access their funds and their salaries before they actually get it. Instead of the monthly or bi-weekly, it can be a weekly basis. So that's helping people not, they don't have to now have high credit loans to try and get that end of month living situation going. So that's how it works.
Yes, it's very interesting because actually many people, especially those who get paid at the end of a month, and this is even a lifestyle, it's the way people live, it's the way they think of their money, it's the norm. They supplement their income by accessing credit. And of course, if people could access their salaries monthly or weekly or as the month progresses, I'm wondering if this is a disruption that would be pushed in by employees or pulled in by employers.
I think that business to business aspect, it's a bit complex when it comes to earned wage access. There has to be, it has to be consumer driven. We have to demand it and also pushed on the company's aspect side of it. So then working with employers, financial institutions, and by the providers of those platforms, whatever programs that they have or apps or platforms, that's more of how it will be able to be properly implemented.
What I also imagine, Sisonke, this might also disrupt the way employers manage cash flows. For instance, it might create a bit of a working capital disruption there. I'm wondering if this might not lead to some form of resistance from employers.
I think the resistance may not be. What it does is employers need their employees to be financially secure so that they are able to be present at work. I think that is more of a driver than it is when it comes to payroll and understanding how the money comes out of the company. Because with the platforms, what happens is they pay after. So the earned wage platforms actually front the cash and then the company pays back. Those are some of the deals that we've seen happen with different platforms. Other platforms, the employee or employer pays up front. So it just depends on who. I think the pushback won't be as big as we expect.
And then I must also ask you, just talking about pushback, those who sell credit, because one thing I'm realizing, Sisonke, is that credit is by far the most profitable thing to sell. We see banks doing it, we see telcos doing it. Anybody who can sell credit certainly does so. And so I'm wondering also if bridging people's cash flow issues might not, get a pushback from those who do offer credit.
I think if the combination works with the employers and the financial institutions, they may be able to find a way to mitigate against the losses that they may expect from this new financial system.
And then, of course, there's also the issue of complementary tools that might, go with this. Now that consumers would have cash in hand, it might mean, for instance, your vehicle installment still goes off at the end of the month, and it still needs to be a complete amount. There's no, staggering paying of that one. It would also, as Sisonke, mean consumers need to learn to have a better relationship with their money, with putting money away, with not having instant gratification. I'm wondering, though, that kind of consciousness, is it something that is of the employer's responsibility or a consumer's ability to be able to manage their finances better?
I think what it is everyone, all stakeholders have to be responsible. Your employer should want to be able to give you financial literacy platforms and programs, budgeting tools, and savings options that help you as an employee best perform. And you should also be looking out for that. Us as employees, we can't expect our company to give us everything. And the financial institutions, it's best for them if they have someone who's able to keep a sustainable job and have their employer basically keep them giving them money so that the financial institution gets money. So I think everyone should want to have those three tools: financial literacy programs, budgeting tools, and also savings options.
Now, we have seen quite a few EWA merchants around the continent, not many here in Southern Africa, but mainly, in West and East Africa. I'm wondering if there are parts of the continent that have already embraced this technology faster than others, and if we can expect it to become a continental-wide phenomenon or saturated in parts of Sub-Saharan Africa.
It is related in how each region works with adopting technology. West and East Africa tend to adopt things faster. Southern Africa tends to have more financing behind this type of development, but maybe the adoption is not as fast. And so that's how it's always played in any sort of technology aspect in our continent. So it will be adopted continent-wise, but it will be staggered growth and regionally dependent. Yeah.
Well, Sisonke, it's always a pleasure hearing from you. Very fascinating developments on the continent. Thank you for your time. That was Sisonke Mgwebi. She is consultant at Frost & Sullivan.